Are you planning to buy a home and thinking how much you should spend on a mortgage down payment? Hi there, my name is Ingrid Rojas, and I'm a real estate broker in the Greater Toronto Area. Today's another episode in our series, Real Estate Talk, and I'm very excited because I've been receiving lots of comments and people are asking me to discuss the mortgage down payment. So guys, here's the answer to your request. But before I start, please do me a favor. Hit that subscribe button below and like, and also share this video so you can be updated on my upcoming real estate videos. Hey, I owe you one. Thank you. So let's get started. The down payment is the amount you pay out of pocket to obtain a mortgage. As of today, the minimum down payment required in Canada for an owner-occupied property is 5% of the purchase for under $500,000 and 10% for any portion above $500,000. So usually the minimum down payment for a rental property is 20%. Banks no longer offer 0% down or mortgages that have 100% financing. In an effort to curb the mortgage fraud and prevent meltdown that occurred in the subprime mortgages in the United States in 2007, Canada implemented stricter lending guidelines to avoid fraudulent applications and curb mortgage defaults. Canada requires a minimum of 5% down, which shows lenders a good saving history and skin in the game, so to speak. Lenders are also required to trace the source of the down payment for the real estate under the Money Laundering and Terrorist Financing Act. Any deposit into your account that was done 90 days or less must be supported with documentation as to where it came from to make sure it's legal. Usually lenders will want to see an accumulated proof of savings in a bank account, not just a lump sum deposit days before the mortgage application, unless you can prove it came from an allowable source. Possible sources of down payment are as follows. Your savings. You'll have to show an accumulated savings in your account for the last 90 days. You may be required to show bank statements that show your name and account number. Large deposits will have to be explained, and history from each account being used will have to be demonstrated. You can use your RRSP, TFSA, investment accounts, and again, you'll need statements showing your name on your account and up to $25,000 per applicant of RRSP savings can be used. It should be in your account for at least 90 days before closing to avoid tax withholdings. Some lenders will allow a portion or some of your down payment to come for a gift. It's called a gifted down payment, and this loan is to be repaid later. A gift letter is required to be signed by the person giving you the gift, and they can't be expected to have that money repaid. You'll also have to provide a copy of the check used for the gift and proof of the deposit in the bank account. Sale of a property. If you're using the proceeds from the sale of another home, you'll have to provide a copy of the signed agreement of purchase and sale. All conditions in that agreement of purchase and sale should be fulfilled, meaning it's a firm sale. Divorce settlement. You will have to provide a copy of the divorce settlement and proof of deposit of funds. If the lawyer is holding that money in trust, a letter from that lawyer will be required. You can use an inheritance. Proof of the inheritance in writing as well as proof of deposit. You can use the sale of a vehicle or another asset as long as you have the bill of sale and a copy of your own registration and proof of deposit. Home equity line of credit. Details of the HELOC mortgage as well as the address and title of the property may need to be provided. You can use a line of credit or personal loan, and proof of these funds and details of the loan will also need to be provided. Here's a warning. To avoid violating the Money Laundering Act, any amounts of unexplained cash must be deposited into the account and aged for at least 90 days. Warning number 2, in the United States, sellers can provide financial assistance to buyers in the way of cash incentives towards a down payment and closing costs. You've may seen this tactic on home buying shows like TLC and HGTV. This isn't allowed here. In Ontario, sellers can provide monetary incentives to improve the value of the home, such as $1,000 for the purchase of a refrigerator or to cover repairs, such as the cost of a new furnace. Here's some questions I get asked. How is the down payment different from the earnest money or deposit money, and why are they required? Well, the deposit or earnest money is actually a part of your down payment. It's not above and beyond. For example, if you're putting 10% down as your mortgage down payment, you may use 5% of those funds as a deposit on the home. Which do you recommend, a bigger or minimum down payment? Well, I recommend a down payment that makes sense for your financial situation. It's always best to discuss this with your mortgage professional. Are there types of financing or loans that do not require payment? No, there really are not. What are requirements to apply for a loan? Check out my other videos on my channel called Shopping for a Mortgage. The link can be found below and it'll provide you lots of information. So that's it, guys. Hope you learned something today about the mortgage down payment. If you have any questions or other real estate topics you want me to talk about, please put them in the comment below or send me an email. It's my great pleasure to help you in your house hunting. Have a great day.